Hello, this is Mary Nasi with IMT Realty. I'm here again today with Mike Mish from RMS Mortgage, and today we're going to be reviewing the advantages or the differences between being pre-qualified, pre-approved, and pre-commitment.
Yep.
So Mike, why don't you explain the three of them to us?
Absolutely, thank you. So the three types that we're looking at today for borrowers are going to be the pre-qual, and a pre-qualification nowadays is really just a conversation that you have when you're initially starting the process. Generally you'll speak with your lender. They'll ask you questions about what your credit score are, what your income is, what you have for assets or down payment, and they'll kind of formulate just an idea and based off those few items, what you can qualify for. The next more common nowadays is the pre-approval, and a pre-approval is when a lender pulls your credit score, reviews your income documents, your asset documents, and any other required documentation for an approval, and runs initial underwriting findings to see if you're actually pre-approved. And that's when you can generate a pre-approval letter. The third, which is less common nowadays but is becoming more popular, is a pre-commitment. And a pre-commitment is when all of the documentation that was collected in the pre-approval process is then submitted to processing and underwriting for underwriting approval for credit and income. And the benefit with a pre-commitment is that having an underwriter view it and make sure it meets all the underwriting standards, it allows you to basically be more competitive when you're offering to purchase a home if you're in a competitive situation, which is very much common nowadays.
So one of the reasons as a realtor, we ask for a pre-qualification or a pre-approval before we begin showing a buyer the houses is one, it's required. The listing agents don't want to open the seller's homes to people that are not qualified. But just as important as a buyer's agent, I don't want to show my clients houses, say in the $400,000 price range, if they're only qualified for houses in the $300,000 price range. I'd rather show them houses that they are going to qualify for, because then when I do show them houses in their price point, they're not going to like it when they're comparing it to a higher price point. And that's not going to make any of us happy. So the pre-qual is required, or a pre-approval is required to start the home buying process. I prefer the pre-approval. It's much stronger and it gives us more leverage when we go to put an offer in on a house. Today, a lot of listing agents are asking us that specific question when we submit the offer. They want to know that somebody's spoken to the lender, they've already had their credit reports looked at, their employment history, pay stubs, etc., because they don't want to get 3 weeks into the process and then have something pop up on the credit report or employment background that's going to cause the financing to implode. So, and then the pre-commitment, I think, is a pretty strong tool today if you are competing
Yes.
Against cash buyers. But I do understand that you guys don't like to use that, constantly, because it'll jam up the process.
Yeah, so it really depends. The pre-commitment depends mostly on the time frame of the buyer. So if a buyer is looking to purchase in the 30 to 60 day period and they're in competitive market situations, by submitting all of that documentation and having that approval, it allows us to close at a much faster rate, being that you only need an appraisal, a contract, and the title on the property, and then you can close. So often you can close in less than 30 days. And if you're competing against cash buyers on properties, it's going to help you with your offer be stronger, to basically secure that property.
Because you can close a lot quicker.
Much quicker,
Yeah, because a lot of cash buyers, they're closing within 30 days.
Right.
And if you can compete with that,
yeah,
it levels the playing field a little
Absolutely. If the time frame's longer and a buyer is looking, 6 months, 9 months, a year, then it doesn't really benefit that buyer much, because they're going to have to resubmit all the documentation as they go through the process. So that's kind of how we look at it.
So how long does it take to get a pre-approval?
A lot of it with a pre-approval depends on the customer. So once they complete their initial app by phone or online, however they want to do it, or in person at my office, from that point, Basically, I can have a pre-approval in 24 to 48 hours, depending on how long it takes them to submit their documentation. With some buyers, I can sit down with them face to face if they have all their documentation prior to. I can actually run the findings and generate a pre-approval at that time while sitting down with them. But in general, it's 24 to 48 hours.
Perfect.
Yeah.
And you deal in all the different loan packages as far as FHA, CHFA, USDA, conventional, as well as the rehab and new construction.
Yep, NBA. Yep.
Perfect. So in closing, pre-approval is probably the most common.
Pre-approval,
and
yep.
what we should try to get most buyers to do. Pre-qual would be something very quick and down and dirty almost,
Yes.
just in a pinch. And pre-commitment is something that if they already know where they want to be, and they know they're going to be competing against cash buyers and they're looking to purchase immediately, that might be a good option. Is that right?
Absolutely. And the main thing with any of those three options that you can't really, you really need to talk to your lender, to break down and have a good conversation and communicate with them on what is going to be the best option for you. All of the technology that we have nowadays in the industry is amazing, and it helps people, upload documents faster and do all these things, but it doesn't take the place of working with a local lender and having good communication between yourself, the buyers and the agents that you're working with. There's really no substitute for that. So depending on how that conversation with your lender goes and the person that you're working with is really going to determine which one of these options is best for your particular situation.
Perfect. All right, Mike, thank you so much for coming in and
Thank
sharing
you.
all that with us today.
Thank you.
All right.